that didn't go very smoothly. Anyway, good morning, everybody. It's the 29th of September. We're Signal Centre Talking Bull. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning, Joe.
Both all right?
Yeah, all good.
Yeah, all good.
How are you?
All good,
You're
thank you.
you're a bit fuzzy this morning, Steve. I don't know if that's a metaphor for how you're feeling, but
Maybe a bit.
go
Yeah,
on.
it says my my internet's unstable.
Okay. Steve and his internet are both unstable this morning, so we'll do our best to get through this anyway. So, yeah, more wild action yesterday in markets as we saw. Pretty hectic stuff, and no signs really in the short term of the volatility slowing down. Let's get into the latest headlines just to round up what happened over the last 24 hours and bring you all up to speed. So, the big news yesterday was that the Bank of England intervened to buy gilts. After the European Open, the Bank of England announced that it would intervene to buy long-dated gilts in the market to combat disorderly conditions. It would conduct daily operations to buy gilts until the 14th of October, as the market has become dysfunctional and was posing a threat to financial stability. The bank also announced that the scheduled gilt sales as part of the quantitative tightening program would now be delayed until the end of October. So some pretty dramatic moves off the back of that, which we'll come on to in a short while. A number of rumours circulating about the reason behind it, some suggesting that there were some pension funds on the brink of going bust had the Bank of England not stepped in to intervene. Also worth noting the U-turn really that's been provided here by the Bank of England. Obviously, the policy, the mini budget that we had last week was designed to try and stimulate the economy, had the complete opposite effect, and now the UK government has been undermined effectively by the Bank of England by this move that they've put in place to effectively add more quantitative easing to the market. So the gilt yields declined sharply after the Bank of England announcement, and volatility remained extremely high. Markets also scaled back their expectations of interest rates hitting 6% next year, while sterling managed to post sharp gains on short covering, although it did quickly fade from its highs of the session. In terms of what's happening in the US, the hawkish Fed rhetoric continues. The Fed president in Atlanta stated that his baseline assessment was for a further 75 basis point rate hike at the November policy meeting, with another 50 basis points in December, which would take the Fed funds to 4.5% overall. He added that supply side improvements had not come as fast as expected. The Bank of England move and the move to buy long-dated gilts also had a significant impact on the US Treasuries, with them rallying strongly as well. The 10-year yield slid to lows near 3.7% from overnight highs at 12-year highs above 4%. Before a slight rebound to 3.83%. So there is also talk as to whether or not the Fed will do a similar sort of job and intervene and pivot on their previous approach. Remains to be seen if that is going to be the case. So a lot of fragility in the markets. The dip in yields helped trigger a rebound in risk appetite. We saw a decent move higher in the equity markets yesterday from their oversold conditions. But overall, it still remains pretty choppy out there. We saw a pretty sharp correction in the US dollar as well as a result of what happened yesterday. But it seems as though the dips are being bought up. It's up by 0.7% already today. So we'll come on to the charts shortly. And some further position adjustment is expected today as we approach month end. This can create even more volatility in trading markets as we settle in for the month end and bit of window dressing and everything else that goes on at the end of the month. So no let up in the volatility expected. So let's take a look at some charts and have a look at what the move from the Bank of England has done to a range of asset classes over the last 24 hours. So Steve, do you want to kick us off with crypto?
Yeah, sure. Taking a look at Bitcoin initially, I've tidied up my daily chart because it just looked like a real mess. And yeah, I suppose Bitcoin is in a bit of a situation at the moment. Here's the long-term chart. We had the head and shoulders formation, which is playing out quite nicely. We've got this this congestion area, which is around the support level. Remember the all-time high, which was posted back in 2017. We eventually broke through it in 2020, the start of 21, and we had the extension higher and the subsequent sell-off since. So we're still holding on to this support level around about the 17,600 areas. That is the lowest we've been, and even this week we've got down very close to that, only 500 points above that 18,150. Sorry, that was last week, and this week we've had attempted the rally, got up to 20,000, just above there, but it's pegging back now. So looking at the daily chart, you've got this formation, which it's not a classic head and shoulders formation, but you've got basically a very, very similar looking formation. Now, these sort of formations happen at the top of the market, but also they can happen during a trend as well. So it's the same type of price action that we're seeing, where the market attempts to rally, comes back, starts forms a neckline, rallies further, forms a head, and the right shoulder rally it has sort of like retraced really, really quickly. So really looking for this break of the neckline, which is around this 17.6 to 18,500 level. Once we get that, next stop is around about 14,000 as good support, and then probably 8,500 for the Bitcoin. That's where I'm expecting to see it sometime soon. So the only one crypto that I really like the look of, that I don't look at all of them, but the one that's sort of like really been in the news headlines is XRP, and this isn't the opposite. This is an inverse head and shoulders. This is much more classic formation. We've had the sell-off, we've had the same sort of left shoulder, head, right shoulder, and we've broken through the neckline, and this looks pretty positive. The measured move target we nearly got to, that's at 58, got up to 50, 55 and a half, just above there, and then we've been pegged back and we've retested the neckline, and yesterday's price action was pretty positive. Although we're on the back foot this morning, I think this is maybe an opportunity to buy, and I tried to do that at the start of the week, selling Bitcoin, buying XRP. It didn't really work out, but could probably have a look at that now, and yeah, it's sort of looking a little bit better now, especially getting back to this like support level here at 2161. So yeah, that's sort of like playing out quite nicely. I'd look to maybe buy a dip down there. Moving on to commodities, gold had a bit of a rally yesterday. Looking at the daily chart, nice little formation. We mentioned this inverted hammer yesterday, and we had the spike lower, which was pretty aggressive, got down to 1614 or 1615, and then we had a really, really decent rally all the way back up to 1662. 1665 was a bit of resistance. There's further resistance above at 1670 to 1690, and overnight we've sold off. So the high of 1660, low of 1641, and it's under pressure this morning. So decent volatility in gold over the past 24 hours, and does look like a little bit of a bottom, but there's resistance above which I think gold will struggle to get through. Looking at oil, we've had a nice rally as well. Similar sort of formation we had. We posted this inverted hammer, and yesterday's price action didn't break below the support level, or the 78.6 Fibonacci support. That comes in around $76. We got close to it, and then rallied really, excuse me, rallied really aggressively, and that looks like it could continue as well. So really looking at forming a bit of a bottom on the WTI crude oil. Natural gas, again, quite a positive day yesterday, almost a bullish hammer type candle, and looking to sort of like maybe kick on from that this morning, and resistance coming in at 727. Above that it can open up. We've still got this head and shoulders formation forming, so potentially further downside to come, but initially we've seem to have formed a bit of a base in the energy sector. So yeah, short term looking quite rosy, but overall still looking for lower levels.
Lovely, thank you, Steve. Okay, let's take a look at the dollar index then, shall we, to start with, before we move on to some of the more exciting stuff that happened yesterday. So dollar index, big correction yesterday, large outside candle posted on the daily chart. As we can see here, we posted new highs on an intraday basis, but then closed very much on the lows, lower than the session, well, the last two sessions actually. We are posting a bit of an inside candle at the moment. We are up by 0.75%, so that gives you an indication of how volatile things are at the minute. That we're up almost 0.75%, which is in general terms quite a huge move for the dollar index, but it's lodged within the body of yesterday's candle. So remains to be seen whether or not it is going to kick on from here. Judging by the underlying trend, you would think that it probably will, although we may see some stabilization here while the market digests all of the news that's been processing over the last 24 hours as a result of this intervention from the Bank of England. So let's take a look at cable then. So massive moves on this yesterday as well, really large range. Obviously, we had this big move to the downside on Friday, the crash, if you like, the capitulation that was triggered by the mini budget that was put in place by by Liz Truss and her crew. Market didn't like it at all, and obviously sparked a lot of very big concerns about the outlook for the UK economy. On Monday morning, we saw this big move to the downside. We then saw a decent recovery. We saw a little bit of stabilization in price on Tuesday, but then yesterday, with this intervention, we saw a really large move to the upside. Still hasn't done enough for me to reverse the course of this trend, and it still looks pretty bearish overall. It remains to be seen whether or not the intervention will have the desired effect. As Steve mentioned yesterday, if we go back over history of when intervention has taken place, it hasn't always been wildly successful. So we'll have to wait and see what happens there. But we're down almost 1% already on cable today, which maybe is an indication that it's not been as well received as the Bank of England would have hoped. I think this is still the level that looms large, really, all the way down here all by itself, and that's parity. That is effectively 1-for-1 on sterling versus the US dollar. And with it being pretty close to that level, I think at some stage we are going to try and tag that. And the market is going to be driven towards that level. Maybe a bit of an attack on the UK by market participants, just because we seem to be making such a mess of everything at the moment, and we're going to be attempt to be punished as a result. Let's take a look at Euro US dollar. Major turnaround on that yesterday. Big bullish outside candle. We posted new lows on an intraday basis, but then closed very much on the front foot, just slightly off of the highs of the session, around 97.48. But this 95.95 level seems to be doing a pretty good job of providing some support. If we look at the weekly chart, we've got quite an impressive doji candle there that's been formed. If we go all the way back to the left-hand side, this is a previous level from December 2000, which seems to be doing a pretty good job at holding up the price for now. But clearly the overall trend remains very bearish. We may see some sort of short covering in the short term, and obviously that can produce some pretty significant rallies to the upside, but doesn't necessarily change the overall outlook and the dominant trend, which still remains bearish. So for me, any upside rally is probably likely to be limited to around 98.65. But if it really gets going, we do see some significant unwinding of short positions in the euro, then there's no reason why it couldn't jump up quite a bit higher than that in the very short term. Might as well take a look at some of the other sterling pairs just to really highlight further volatility here. This is sterling versus the Aussie dollar. Huge move lower on the Monday as a result of the kind of capitulation that we saw. Prices have been moving higher over the last three sessions, and we are very close to a decent resistance level, I would say. This low here that we posted on the 5th of September, we tagged it yesterday. We may have another attempt at that in the short term. That is up by 0.17% at the minute, in quite stark contrast really to what we're seeing with cable so far today. Look at sterling CAD, again, huge ranges on the charts that we've seen, rallied into a resistance level here. Remains to be seen if we can take that out. Obviously this really large red candle from Friday is something that we need to try and get back above if we are to see any signs of a reversal on that. Sterling Swiss really not gone anywhere on a closing basis over the last four sessions. It's kind of stabilizing around here, but obviously we have seen some pretty large ranges over the last few sessions as well. Take a look at sterling yen. We saw a big breakdown here of this range, and also taking out the trend line as well. Let's just tidy this up just to further highlight this range. We're back inside the range. So maybe we could see a bit of a lift to the upside, maybe as high as this swing low here from the 2nd of August as a short-term target on the upside. But overall, very, very choppy. And I think you've got to be very cute with your positioning of your risk management on these ideas at the minute if you are to trade them, because you've got to take into account that we've got this massive swing low down here, which is a marks level on the charts, which could be retested again at some point. So from a risk reward perspective, buying here, targeting the upside at the top end of the range, you'd probably need to have a stop below the low here. And I don't imagine the risk reward is overly favorable on that at the minute. We're going to move on to the indices. I'm going to start off with the ASX 200 because it fell into a really interesting level of support. This was the previous swing low from the 17th of June. We pretty much tagged that, and then yesterday posted a nice bullish outside day. So we made new lows on the session, closed on pretty much the highs, giving a little bit back so far, but this does seem to be a pretty interesting area of support. So if this can continue to hold, then maybe we'll see some price stabilization. If it doesn't, then it's just more of the same. We're looking for lower prices, and there's quite a lot of white space below that level for us to look at on the downside. Big gap we can see down the left-hand side of the chart, which would be, for me, the obvious level to target if we are to see a breakdown of that 6403 level. Looking at the European markets, let's take a look at Euro Stoxx 50 today. So we saw a reversal yesterday. We made new lows on the session, but closed higher on the day. We're still below this major level of resistance, which was previously a very big level of support. We're posting quite a few losses today, actually, down by 1.8% already. So clearly the markets are not overly enthused by what they're seeing at the minute, despite the best efforts of the Bank of England. And it looks as though lower prices are set to persist. So if we take out yesterday's low, then very close by, we have this 78.6% level at 3220. Let's look at the CAC. Tried to hold on to support yesterday from this previous swing low back in March, held above it, closed above it, but now we're back below it and posting a nasty looking red candle. We've got a 61.8% fib level at 55.84 to target here in the very short term. Let's take a look at DAX. Tried to sell this yesterday on the gun to the head trade, but got whipped out of it due to the volatile conditions. We are hugging around a 50% Fibonacci retracement level. Big red candle already, almost 2% down now on this. If we take out yesterday's lows, then we'll be targeting these support areas down here at 11,330 down to 11,147. So the outlook still remains pretty fragile on that for now. Let's take a look at the FTSE 100. Horrible move on this today. We've talked about this massive area of support that we have on the FTSE chart. We tagged it yesterday, then we reversed very sharply off of the Bank of England's action yesterday, but really large red candle already forming on this. And we look set, I think, to challenge this support level once again. And if it breaks, we've seen this hold on 5 occasions previously. I think we could get a fairly swift reaction lower if this doesn't hold. And the next level down to be targeting for me would be this 38.2% fib level at 65.68. US markets now. Nasdaq still holding above this major support level, 11,035. It was the previous swing lows from the 16th of June. Decent reversal posted yesterday, but giving a lot of that back already today. A fresh challenge of that could see it eventually break, and that would be a really negative sign going into the end of the month. Let's just take a look at how that would look on the monthly chart. If we saw a close below that level there, that would be, I think, pretty significant and probably indicate lower prices down to a minimum, I would say, of 10,500, which is the 61.8% Fibonacci retracement level of the entire move that we saw from the lows in the pandemic to the highs that we posted last year in November. S&P 500, this was holding above a major level of support. Again, this swing low from back in June, posted a bullish outside candle yesterday, pretty much bang in line with support, which is exactly what you want to see as a technical analyst. So as long as it continues to hold above that, there is potential for a move to the upside, but we know that the pressure is very much leading on the downside. And if we get a break of this on a closing basis, on a weekly basis, on a monthly basis, then I think that sets up further declines down to 3,500 and then potentially down to 3,400 on the S&P. Rounding up with the Dow, we saw a break here of the swing low from June. We actually saw a retest of that level yesterday. Despite the bullish efforts from the Dow Jones, it didn't manage to close above that level, which I think is a sign of further weakness to come potentially. Provided, if we can't get above this, then we're going to see this act as a resistance, and therefore we can look to sell into this strength, targeting a move down to this 50% Fibonacci level at 27,578. So that's it for the indices. Before we move on to stocks, I think we probably should have a look at the gilt market. I know it's not something we generally cover on here, but obviously it's very much in the news because of the Bank of England action yesterday. So the UK gilts pretty much underpin many of the pension funds that are owned in the UK, because it's effectively government debt. It should be one of the safest assets you can buy. This is a weekly chart on the UK gilts. And forever, really, it's just been in a massive uptrend if you go back even further on the charts. But in recent times, we've seen the bottom fall out of this quite considerably. This really is a major, major issue. Big rounding top formed here, and then since then prices have just continued to slide. And really, this is just a panic sell-off, a capitulation in the UK gilt market. And we saw the action yesterday. We crashed all the way down to 91.88 on this market before the Bank of England stepped in to try and drive it higher. Yesterday, we saw about 7% move higher in this particular market in the 10-year. If you look at the longer dated ones where the Bank of England are now buying, so they're effectively the biggest buyer in the market and trying to push up the price, we saw huge moves of 14-15% on that yesterday, I think. So it's really quite significant stuff. And I would urge anybody that's interested in financial markets to take a read up about the importance of government debt and gilts, 10-year yields, etc., and find out more about what role they play in the financial markets. If you think the equity markets are big, these are kind of 10 times larger. So it really is quite significant. Steve, you got anything to add on that with your wisdom and experience in markets?
It's pretty frightening market, and intervention never works. So although we've seen a decent rally back in the gilts, there's a much bigger underlying problem, which it feels like everyone's panicking and running about like headless chickens, trying to do what they can, thinking they're going to solve this with some intervention, but intervention never works. So I wouldn't be surprised to see sort of us revisit those lows that you can see on that chart, and more. It just feels like we're sort of like the gun-to-head opportunities this morning in selling indices is like slipping away from us, but we've got to sort of like, it is something we do in the show, but yeah, it seems to be panic in the markets, even in the last hour or so. FTSE looks like it's crashing. So yeah, I wouldn't be surprised to see this negativity carry on. I think we've had a little bit of a whip back yesterday, which you got whipped out of your position. But it feels like it's one of those whip outs, and then just maybe it's just about the timing of it. I think it's the right thing to be doing. We're heading towards a bit of a crisis, and there's not a lot people can do. It's just realizing, yeah.
This low yesterday, I think we saw the Bank of England step in because there was news or murmurs of or several pension funds blowing up. So you think people have worked for the last 40 years of their life, about to take their retirement, and their pension fund is just about to be pulled from underneath them potentially if a fund goes bust. That is, incomprehensible really. Effectively, the Bank of England said yesterday they will do whatever it takes. They've set their stall out to buy long-dated gilts, which is effectively a form of quantitative easing between now and the 14th of October. And in terms of size, they've not given us any indication, so they're just going to throw everything at it by the looks of things to try and stabilise this market and maybe deal with the consequences later down the line, which has been the mantra really of the markets for what feels like forever. And it seems like it's all coming home to roost a little bit at the moment.
It does feel like it, doesn't it, Jamie?
Yeah, sorry for the negativity, Jamie. I'm not sure, again, you're going to be able to help us out here, but have a go by all means.
No, I don't. Maybe I get more unusual. We've had, like Steve mentioned, we had a bit of a whip back yesterday. So some of the stocks responded quite well, but you can't really take each day as like its own thing. You've got to look at the bigger picture, as we do. We always look at our weekly timeframes and our monthly timeframes. So While I can give some light relief on some individual stocks, the overall picture is still bleak. And on that note, we'll start with our biggest loser of the day, which is this MNMD, or Mind Medicine, which was down 47%. It's been a pretty nasty downtrend for a while, as a lot of these names we look at for the biggest loser usually are. Let's have a look, see if we can find some information on it. I don't know what this is. This isn't relevant, is it? I don't know if we're going to be able to. I'm not going to go crazy on it. Yep, down 47%. That'll do. On the flip side of that, we've got PRTA, Prothena Corporation, health technology. So another day of me probably mispronouncing something. Up 87.52% on some news. Let's see if we can find out.
It would be funny, Jamie, if we did if you came on the show and said like biggest winner, biggest loser, and the biggest winner was like a down, like a some percent down. No, I'm just saying, if you come on and say the biggest winner today is down 6%, the biggest loser is down 100% or whatever. You know, when you sort of like expect to see a bit of positivity, and it's always there. There's always a winner. You always feel like there's a winner somewhere, but what about if there was a day where everything was losing? That would be a bit frightening.
I mean, it feels like that could happen at some point.
It will happen.
It will come. Yeah.
Yeah, but we haven't had that day yet since I've been doing this little segment, so we'll keep with at least one stock that's done well. And today it was this PRTA. See if we can find the information on this. PRTA shares jumped 58% after rising the previous session. Okay, well that's in depth. Up 58%. It saves my blushes of having to try and pronounce some drug that's been announced or saved or whatever. But look at this. We got a lot of green for yesterday on the S&P 500, which is, like I say, it's good for the day's trading, but does it feel like a bit of light relief before the sell-off continues? I think that's probably most likely. What stands out for me though here, obviously a lot of green, but Apple, I don't know the last time the general market was up, but Apple was actually the one that was down. Certainly not for a long time as far as I can remember. But key moves, we got Meta was up 5%, Lilly was up, what's that, 7.5% as well. I think that had some news yesterday. Where's Netflix? Up almost 10% up here. So yeah, pretty good individual day for some of these names. We'll start off looking at Apple. And this actually was down pretty heavy at one stage and got brought back up towards the close. At one stage it was down close to 5% before it did get brought back up. If we look at this on the 4-hour chart, you can see that there was quite an aggressive sell-off at the start of the session. Was there some news on Apple? See if we can find something. No, not too much detail. Oh, here we go. Yeah, I don't know, maybe it was off the back of that iPhone 14 news. Is not enough demand for it. I think that was the story there. So maybe that was what spurred that move downwards. Ran into this 61.8 fib quite nicely though, and that level seems to have done a pretty good job at the moment. You see the volume starting to pick up though on these down days. I was checking out the weekly chart for Apple, and again, I always go on about volume, but at the time we noted that this rally we got was pretty low volume. You can see all the volume was under that average, and the sell-offs we're having here and now here, the volume is above that 20 period average. So perhaps a bit of a change in that characteristic there for Apple, and perhaps preempting a move a bit lower. We'll keep an eye on it and see how that plays out. Jumping on Amazon. Amazon had a better day yesterday, 3.15% up, excuse me. Not really too much more to add. This has been selling off pretty aggressively. It's run right through this level of support that we had here. So we can get rid of that. This will now act as resistance if we do get back to this level. There we go. So, you know, while we're in this, certainly on the shorter term, we're in a downtrend. You can see lower high, lower low now. Perhaps we get brought back up into this resistance before selling off again. Something like that is what I'd be looking at. That could be quite a nice area to try and target a short if you like that kind of thing. Coca-Cola we looked at yesterday as well. Pretty important close on a weekly chart. coming in would be below this previous. I mean, we already closed below this wick, but below these wicks here in the weekly close from back in March of this year. And if we do get that, we've already noted this double top. Price could be then moving towards this measured move target. Again, keep an eye on that. Lilly had one of the best days we saw of stocks yesterday. You can see the volume picked up on some news. I will try and dissect it, but I'm again scared to when I see health technology. I don't want to get involved in that. But yeah, a really nice jump up, 7% on the day. This has actually been a pretty well-performing stock given the general market. As we know, the last kind of 6 months we've had this pretty aggressive potential start of a bear market, and Lilly has held up really, really nicely throughout that time. You can see on a weekly chart it's still posting those higher highs and higher lows, so standing out for me a little bit there. If we look at the news on this, let's try and do this quickly. I think it's, let's see, Thermo Fisher, US FDA grants approval for its screening technology for various types of cancer, and the approval was used. Oh, you can read that. Good job, Lilly, up 7.5%. Pretty nice day. Another stock which did pretty well yesterday is Netflix, and this is potentially setting up for quite a nice risk-reward trade. A bit of a cup and handle pattern. It does come off the back of this pretty aggressive move we've seen lower, but you might be able to get some good risk-reward setting longs around here. If we do get a break of this resistance, obviously current market conditions may be like a false breakout, but if we get a bit of consolidation around here, you can keep it pretty tight. You can either keep it below this swing low, or if there's another consolidation, you can keep your stop loss pretty tight to that, and then maybe even target a gap fill all the way up to this point here, so you get some decent risk reward there. But setting up quite nicely. Netflix up 9% on the day yesterday, so maybe a bit of a turnaround here. Qualcomm, check this out yesterday. Head and shoulders still looks like it's in play. No clear-cut break of this neckline resistance yet, but certainly want to be keeping an eye on this. Like we said yesterday, it's really starting to set up quite nicely from the downside. Tesla, again, we've kept a bit of an eye on this, and so far it's playing out how we thought it might do. Possibly, I think, going a bit higher, maybe towards these 290 levels before selling off further. We'll check out a couple of the EU stocks as well. I want to look at Avacta Group. This band of support, which has done a job for a long time, actually since June of 2020. Price keeps on whipping off it, and it's done so again yesterday with this really nice bullish hammer type candle. Sold off a little bit today, but so far so good on this level, holding up again. Boohoo, we noted it was down on earnings yesterday, actually got bought up throughout the session, but again 5% lower on the day already, so one to keep close eye on there. And Rolls-Royce, we're at this measured move target from this bearish channel we saw here, and this just keeps on heading lower. It's really not looking healthy at the moment. I think we'll probably pass most fibs, but let's see if we've got any we can have a look at. There you go, the 78.6 fib could still be in play if we do get a break of this. I don't know why I've got a pink line, but I do. So yeah, pretty good day, an individual day on the stocks yesterday, but possibly a bit of a short-term buy up before a more aggressive sell-off. Yeah, I can't add more positivity.
Okay, thank you, Jamie. Right, so the gun to the head trades then from yesterday. Well, let's just take a quick look first of all at what it is we do, so people who are new to watching the stream are aware. Just a bit of fun each day. 3 of us pick trade ideas live on the video in the hope that we can turn them around and make some decent profit between now and 9 o'clock this evening when we close the trades off. Each of the ideas must have stops and targets, and they must have risk reward ratios in excess of 2 to 1. Anybody who wants to check these ideas out, please feel free to do so. You'll find them on our TradingView profile at signal_center. Where hopefully you're watching the stream as well. So yesterday's trade ideas, Jamie was the only one to come away from it positively. He was buying Ethereum into this support level and was nicely on side at 9 o'clock. I think 1.5 hour roughly. Let me just double check. Yeah, so 1.39R on Ethereum yesterday. So well done to you. Steve and I were looking at indices, looking for more downside. Obviously, we didn't foresee any intervention from central banks, and as a result, that created a significant amount of volatility. We saw this push to the upside, but as you can see now, it is rolling over once again to the downside, overshooting that resistance level that we expected to do a job there. Nasdaq, similar setup for Steve. He was looking to sell into a retest of this previous support, now resistance. But it was a pretty good day for the US markets, as Jamie's went through. Actually went all the way up to his other resistance level he had around 11,495 before then retreating. So 3 new ideas coming your way now. Steve indicated that you were looking to chase some of these indices lower. Is that still the case, or have we talked too much and removed the opportunity from you?
I don't think, no matter how much you talk, you're going to remove the opportunity to sell indices.
Okay.
I'm becoming very bearish, and that's always a dangerous thing for me. The one I'm looking at really is FTSE. I think, obviously, with the issues going on in the UK at the moment, this could be the one that's really prime for getting smashed. I'm looking to sell FTSE at 68, 64. Targeting a move to 65, 64 with a stop 100 points high at 69, 64. Now that's a 3-to-1 risk reward. So looking for it to really break through the support at 6,800 and continue lower. I just think we're just at the start of this.
Yeah, that would be really nasty indeed. Again, referring to the fact that we are at the end of the month and also the end of the week. So if you get big bearish candles in those timeframes on your chart, they will leave a pretty nasty footprint on the long-term setup. So let's wait and see what happens there. Jamie, have you got one ready?
Yep, I'm good to go. I'm looking at the Bitcoin today. Got this pretty key level marked on my chart. This kind of 19,600, which has done a really good job all the way back in August. Not that long ago. I'm on a 4-hour chart. But you can see how its price has interacted with this level, doing a pretty good job of holding it both ways. And we've hit it again recently. I'll drill this down to a 1-hour chart, coinciding with a 61.8 fib from this high to this low. You can see here. So I'm just going to hope this resistance and the 61.8 fib does hold up okay, and aim to sell this a bit lower. So we will set our sell level at current price, which is 19,300. There we go. Keeping the stop, I'm thinking I would ideally want to go above the kind of this high, but that doesn't work my risk reward. So we're going to go above. I was about to point at my screen. That's pretty stupid, isn't it? Above this swing high here. So we'll keep the stop at 19,658. There we are, and we'll target these lows all the way down here at 18,489. I went to these 18,489. There we go. So if we do get that play out today, it will just be 2.27R risk reward on that. So yeah, they can sell Bitcoin today.
Okay, good luck. I'm following Steve in on the indices. So I've got the Dow Jones on the chart here. This is, for me, the weakest of the US markets at the moment. This is the one that we've seen break down below support at 26,700. We saw a decent effort at rallying yesterday, but that's only gone as far as retesting the newly formed resistance before selling off. So I'm looking for lower prices to play out here. Looking at it on the intraday charts, I was hoping to get in a bit better prices, but the waffling has cost me there. So it's currently at 29,350. I'm targeting a move down to 28,585. So that would be a sort of short-term new low if that does occur. So I'm going to have to tighten my stop up quite considerably to make this a decent opportunity. So I'm going to put the stop at 29,675. So looking for 2.37R on the Dow Jones today. Just looking at that at the moment, it's highly speculative, but there is maybe possibilities that this could be some sort of bottom forming in the intraday charts. It's highly speculative, needs a lot to do before it does, but conscious that that could maybe play out, but my preference is still for lower prices. So I'm going to back my gut feel on that. So there's the 3 trades today. That will be posted up imminently once we finish the stream. I think the other guys will have theirs up a bit sooner. So if you want to check those out, please feel free to do so. Okay, day ahead. So not much on the calendar today. What I do want to talk about is the latest sort of headlines that are coming out this morning and focus on those. So later today, we've got 1:30 US jobless claims. That's UK time, and also at the same time we've got the latest number from Canada on their GDP. Then tomorrow we have the US PCE prices index. Something we haven't really covered on the video of late is the Nord Stream pipelines, which are very much in the news at the moment, and there is talk that they have been sabotaged and that there is a pretty substantial gas leak going on at the moment in the seas near Denmark. No one's taking responsibility for it. Obviously, a lot of fingers are pointing towards Russia, and they're obviously strenuously denying it. But again, that is a pretty significant thing from a geopolitical standpoint. And obviously is not helping the underlying markets at the minute. In terms of what's happening in the UK already this morning, there's been a few criticisms levelled at Liz Truss, because since the mini budget on Friday, she has kind of been absent and hasn't really faced up to what's going on with the markets and the impact that the budget has had. She has actually appeared on a UK radio station this morning, a regional one, between 8 and 9 o'clock. And in terms of the commentary coming out of that, she says that the fiscal statement is the correct plan, so kind of doubling down on their thoughts there, and believe that the growth plan that they've set in place for the economy is the right one and that it is going to work. And also, quite interestingly, disagreed with the International Monetary Fund's remarks, the IMF, who were pretty damning of the UK action that took place last week. So lots going on in the news at the minute, and as a result, it is likely to create substantial volatility in the markets at the moment.
Yeah, be careful out there.
Indeed. So that's it from us. We'll wrap it up there, and I don't think there's anything on the streams, is there? No. If anybody does want to participate on these streams, feel free to do so. Let us know what you're looking at, and if we can help you out of any tight spots or give you some inspiration on what to look at, then please feel free to post a comment and we'll do our best to help. Okay, have a great day, everybody, and we will be back tomorrow.
Cheers.
Bye-bye.